it's tough. And maybe if I just don't know, if I get this analysis paralysis, it should be a no trade. And actually, I don't actually even need to debate or think about this because that is in my plan. You know, if you're confused, just look at your plan. You have it right here, a physical reminder printed out. Hello everybody, welcome back to another video. Today is Thursday, October 8th. And today's video is going to be really quick. I'm going to touch on an important life lesson that I kind of touched on yesterday about taking trading more seriously. And then I'm also going to review the price action. So, yeah, this is the important life lesson. Um, I talked about how I need to make trading in yesterday's video. I need to make it more, life or death. Like pretend that, like just crazy hypotheticals, right? Because that is what it takes for me to take this seriously. Because I'm a very laid back, easygoing guy, but I need to make trading more serious in my head, and I need to focus on the process and not the stimulation. And I need to follow the process very well. So that's all I'm going to try and focus on is following the process, making it a life or death. So here's a couple of reminders to do that. Every day I open up my daily notes, do my pre-market checklist, do a mindfulness activity, which I've been neglecting, but I'm going to do again. But I also have these reminders here to force me to do that, to force me to think about the importance of following a process. So this is Philippe Petit. He's a Frenchman. He's kind of like he was talked about in Tom Hugard's book, Best Loser Wins, and he's a famous guy. You know, they made a like a movie, a biopic movie with Joseph Gordon-Levitt, I think, about him, and he's kind of like the previous generation's Alex Honnold, like doing an extreme. Alex Honnold's the climber who did uh, free soloed El Cap in Yosemite. This guy, he walked across the World Trade buildings, the Twin Towers, on a tightrope. So he and Alex Honnold both, you have to focus on the process. For them, it's literally life or death. Uh, Trading is not anywhere near that scary, but I treat it as stimulation, an outlet. So I need to treat it following my process specifically as life or death. I don't want to trade for money because ironically, when I trade for money, I lose money, but when I trade to follow a process, I make money. So I just need to remind myself to follow a process better. I have some cool Latin term here: mori quam fodari, death before dishonor. I just added that because I think it sounds cool, but also something I can say like I, I have to make this very serious. Bushido, the way of the warrior, discipline, honor, dedication to purpose. I need to be a warrior. I need to be like a Japanese samurai. Bushido. And then Kokoro Shizuku or Shizuka Niken Omatsu, hold the sword with a calm heart. I gotta make it serious, but I also gotta be peaceful and chill. Look at this dude. He looks pretty peaceful and chill. I'm not saying you need to be peaceful and chill standing on top of a building, but when you're trading, you should be peaceful and chill. Treat it as life or death, but also be relaxed and calm because getting all nervous will just hurt you. So, I realize some of this may sound a little weird if you did not see yesterday's video, but in yesterday's video, I talked a lot about how I need to follow my process and treat it life or death. And I gave a lot of examples. So this is just to supplement yesterday's video and serve as a reminder to myself to follow a process above all else. That's what I'm trying to do. I need to. Here, you can read this here actually. This note here. This will make more sense. I'm not going to talk about this note because I talked about it in yesterday's video, but you can just pause the video now and read this because this basically summarizes everything I just said. One and two, don't over leverage and just follow your plan. Don't guess, basically. But 3, take it super serious. Just realized that's funny. Okay, so today's price action. Not a whole lot happened, which is expected after the craziness from, um, the election. Another gap up. Um, Looks like more happened on the Nasdaq. More volatility went from 21,000 up to 21,200. So yeah, some very good volatility for the Nasdaq. Not as much as the S&P 500, but yeah, I've mainly been focusing on the S&P 500, so that's what I will focus on today. Um, Went up to or opened right near resistance 1, broke through it, pushed halfway up to resistance 2, pulled back, pushed back up again, and broke this high. Correction, sell off. Man, bar 52, that would have been a good entry bar. Um, safe trade too. Just target the moving average. Um, yeah, that's easy trade. Really easy trade to take because that's such a good small bar. And yeah, you could have got up to 96. So yeah, that's a good trade there. Bar 52. Definitely would have taken that trade. Oh, another good point. Guy or girl who watches my video. I don't know because their their YouTube name just says knives. I'm gonna assume it's a guy because according to YouTube demographics, 96% of the people that watch my videos are guys. So some guy commented um, that in my videos when I do these price action analysis, I shouldn't say, "Oh, you could have maybe entered here. This might have been a good trade." Completely agree. Very good comment. So thank you for commenting, knives. Um, I'm not gonna do that anymore. And if I do that, it's a mistake. It's a misspeak. I'm gonna try and correct myself. I want to focus on saying this is a good trade to take. This is when I should have entered. So I'm gonna do that. And just say when I should have entered. Um, I wouldn't have entered here because all these wicks on top, and with it being way above the Keltner channel, it just looks overextended to me. I mean, but of course it does go up. So, but in the time, it just doesn't look very good. All these wicks, I just don't like that. Uh, I would have probably looked to maybe get short here. I probably would have been fooled. I would have thought it comes up above the pivot and pauses and might come down. Hopefully, I could have resisted that, but see, I'm trying. This is why Knives' comment was such a good point because I can't. I can't say maybe I should have entered here. I have to say I would have entered here or I would not have, and I have to say why. Why is it bad to short here? Because why would I have not shorted here? Because it hasn't shown any downward momentum. There's no downward momentum on the hourly. We're above the EMAs on the hourly. We're above the EMAs on the 5 minutes. It's not a good time to short. And there hasn't been any like resistance yet. And yeah, look, if you would have shorted here, it would have ticked you out by one tick, entered you by one tick, and gone up and stopped you out. So bad idea. And I don't think like I want to look at this in hindsight and say bar 9. That's a good short bar because it's a small doji, and you could have entered here and you could have targeted this low, and you could have made your money. You could have made like 3 points. But if I say this is a good short trade, then how can I say that bar 7 is not a good short trade? I don't think I can, and that's a fundamental problem with my plan that I need to sort out. Um, Or maybe it's just because not every trade is going to be a winner. So maybe, according to my plan, I should have got short on bar 7 and I should have got short on bar 9. I need to figure that out and work that out and make that more precise. Um, because this is 82 points. Well, I guess that's actually only 6 points of risk, so that's not horrible. So maybe, I don't know. See, it's really hard because I came up with a rationalization for why this is a, I wouldn't go long here, but going long here would have led to a 15-point move. Then maybe a 20-point move. And then it kept going up all day. So I don't know. Maybe like this probably is a good long move because it gapped up and it held. So yeah, I don't know. I need to. It's really hard to look back at hindsight and say this is what I should have done because I have the privilege of knowing what happened after. But that's not how a plan should work. I need to make pattern recognition. Like I go back on camera because I want to work on my pattern recognition and I want to be educational and say and teach people about my plan. I don't have I'm not I don't expect people to listen to me now because I'm not profitable, but that's like my long-term aim. Um, so yeah, it's tough. It's tough. And maybe if I just don't know, if I get this analysis paralysis, it should be a no trade. Because like bar 21, that's like a definite like yes, you should take that. Because it's already shown the bullish momentum. It has a pullback. Bar 21 is like okay, here's a hammer up bar after a pullback in a bullish environment. I'm going to take that. And I would have got long and it would have taken a while, but I probably would have just targeted above this pivot point and I would have captured, like 6 points. Made good money. Bar 32. That's a good one because it's a pullback. It's a good time to go long. And you could just target above the pivot point. And that's, 3 points. Bar 43, this is a good short because it closes practically on or near its lows. And, just expect another correction down because it's been up above the 21 all day. And it makes sense that this would cross. Bar 48, great for a short down to bar 46. Bar 52, great for a long up to right here because this is where the pivot it broke down through right here. Like through this is what it broke through. So that's where I would target. And that's 91. That's 7-8 points. So the start of the day is the most confusing to me because I don't know what kind of day it is yet, but it's also the time where you get the best moves. And I think the answer is because we're in a bullish uptrend, there just should be no shorts on the table. I think the only thing on the table should be allowed are longs. And I think that trying to go short off bar 7 is just stupid because it's essentially trying to catch a knife but upwards. It's like if gravity was falling upwards and knives were falling upwards because the market is going upwards really fast. Trying to go short here is just it's dumb. And in the morning, though, I would have all these biases like, oh, there's a big gap here. There's all these wicks here, and was staying under the pivot. So does that all just get thrown out of the window when it breaks up? What about when it has a pause and it looks like it kind of wants to come down? Well, maybe I just need to wait for a stronger, decisive candle short. Or maybe I just need to say I'm not going to take any shorts at all. I'm only going to go for longs. I think that's probably the best answer is if I'm above. And actually, I don't actually even need to debate or think about this because that is in my plan. Literally right here it says 1 hour above below EMAs, 5 minute above below EMAs, aligned, confluence, take trade. Not aligned, pass, wait for alignment, wait for a right side of the V entry. So I guess the only justification for going short would be a right side of the V entry. And I mean, you could kind of argue that you could go for that right side of the V entry on bar 7. But I think that's kind of a cope. I think that's unrealistic. I think after this 15-minute bar, that looks, if it opened like this and you saw that 15-minute bar, that looks bearish. It looks like we're going to have a gap close or at least come down and touch prior day highs. But then after that bar, well, that looks pretty bullish. But then you get this pause on bar 7. So bar 7, I probably would have just fooled me. I mean, I might have tried to get short and lost. But then I might have tried on bar 9 and won and been break even or slightly above break even. And maybe I would have taken a break and sat out because I was frustrated. And maybe on bar 18 after this pause, this is a good short. And you could target for down here because this is where 15 and 16 broke up through. It's where it expanded from. Market's efficient. It came back and tested that. So pushed up, paused, pulled back. Could have taken the pullback down, and then you could have got this, taken that pullback as an opportunity to join the trend. I think bar 21 is a good entry bar. And you could have rode this up and targeted the pivot and hit it. And it would have been painful because these are slow moving bars. It would have taken from 9, 10, would have taken 40 minutes, which for me, my average hold time over the last 3 months is far shorter than it should be. My average hold time over the last 3 months is probably like 5 to 10 minutes per trade. I need to hold for longer and I need to take less trades. I need to be more disciplined. So just like I have that life or death of when to enter right, I also need to have it of trusting my plan. I need to trust my plan. So, and say, okay, could you stay in and sit here? And if you violated that, something happens to your family? Could you do that? Yeah, I think I could. So I just need to make it more serious in my brain. Because that's what it takes to work for me. Bar 32, could have just targeted up here. Or bar 32, you could have just targeted like there. You could have just done a 1 candle trade up to the high. And it's not a lot of money, but it's 1R. And those add up over time. I mean, adds up here, 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 here. It adds up. Those do add up. Yes, 20% of your trades will be your biggest trades that are much bigger. But it doesn't mean you shouldn't take the small trades. That's my philosophy. I have yet to prove if it works long term. But that's my philosophy. And that's what I'm going to try and do. And I know it does work for some people. So I think it'll work for me. Hold on, I got a text real quick. Sorry. Sorry, my brother texting. Brother texted me. Yeah. I got kind of stuffy during this video. I feel like my voice changed. Um, I don't know why. Excuse me though. 52, great long up to here. Already discussed that. This is too choppy. There's too many wicks. Not anything. There's not any good trade here. Okay, and it goes up without you. And shit happens. Sometimes you miss out, but there's no good signal bars here. Um, I mean, 62. You could have. That's a pretty small bar, and it's at the top of this range area. So you could have taken a short off that, and it could have worked. And I would have. I'm not saying you could have. I would have potentially taken this short if I was watching. And that's a riskier short, but we're in a range. We're in an intraday range. It's at the top of the range. Just target the range lows. Target right here. That's 4 or 5 points. That's great. There wasn't a good signal bar to get long. That happens. Oh well. Um, 70. I would have taken that short. That's a good short bar to take. Same with 73. Um, and some of these might not have worked, but that's okay. That's just how it goes. Um, I'm just calling out all the opportunities I would take according to my plan as a trader that likes to go for a 60 to 70% win rate plus and have 1 to 1.5 to maybe 2 R on my wins. And if it's a day that might be a trend day, then I'm going to go for bigger wins. But most days, that's what I want to do. High win rate, easy trades, simple process. That's my bread and butter. So that's my video. I know this was probably frustrating to some viewers to hear me be so indecisive and really analyze it, but that's kind of what it takes for me to learn. And I think the what confused me the most was those initial trades at the start of the day. That's what I spent most of the video talking about. The key is just follow your plan. You know, if you're confused, just look at your plan. You have it right here, a physical reminder printed out. And if you're unsure, just say, okay, we're above. I'm only going to take longs. Those counter trend trades for 1R, those can be on the table. That's fine. But if you're unsure, just skip. Look how many opportunities there were today. There was like a lot. 1, 2, 3, 4, 5, 6, 7. I'm sure there's 2 or 3 more. So 7, 8 opportunities today to take trades. You only need to capture 3 or 4, and it would have worked out great. So, but the best one is bar 52, short, long. This short here, this long here, this short here. So that's it. And I guess, if you had the confidence, you could have taken the long on bar 4. I don't think I would have had the confidence to take this. If it's not in my plan to take this long because of all these wicks up top and thinking the gap will close. And then once it breaks up, at that point, I should be thinking, okay, time to be long. But the problem is there's not a good signal bar to get long. So that's my video for the day. I meant for this to be 3 minutes. I made it way longer, so I'm sorry about that. But I think it was important for me to process that, because if I don't process it now, I'm gonna be completely lost when it's live trading and things are actually moving fast. So I have to figure it out now. And I think I came to a really good resolution. So, and at the end of the day, it all goes back to what I started the video with. In this note here, it's about just 1, 2, 3, not over leveraging, taking entries with confirmation, taking them on signal bars at good locations. And you could add to that, I guess, you could add supported by trend, um, or supported by directional bias. But really, the big thing is just wait for entries, wait for signal bars. And if they're at a good location, you'll probably at least make 1R or break even. So that's my video. Thank you for watching. Have a good day. And I'm going to start trading next week on Monday probably. So yeah, I'll be back next week. Thank you for watching. Bye.